In 6 years, someone drained more money from a single government account than most Pakistani cities spend on development in a decade. Not a hacker, not a foreign syndicate, not even a powerful minister at first, a district accounts clerk, a bank cashier, and a truck driver who once hauled gravel for a living. Together, investigators say, they moved somewhere between 30 and 40 billion rupees out of one account, an amount closer to what a small country spends on its entire annual health budget. The account had an unglamorous, almost forgettable name, Security and Deposit Works, KP 10113. For 6 years, nobody in Pakistan's financial oversight system noticed anything was wrong. No red flag from the bank, no alarm from the accountant general's office, no audit that caught it in time. Until in April 2025, the National Accountability Bureau finally pulled the thread, and an entire province's financial system started to unravel. If you run a business, sit on a board, or hold assets anywhere near Pakistan's public sector, this story is not just history, it is a warning. Because the real question isn't how did they steal it, it's how did the system let them, and could it happen to an account next to yours? I'm going to walk you through exactly how this scheme worked, who has been arrested, how much has been recovered, and, more importantly, what it tells you about protecting yourself from the next one. This is the Kohistan Scandal. And by the end of this video, you'll understand it better than most people who report on it for a living. To understand this scandal, you first need to understand where Upper Kohistan sits, a remote mountainous district in Khyber Pakhtunkhwa, wedged along the Karakoram Highway. It is not a wealthy district. Its official annual development budget runs somewhere between 500 million and 1.5 billion rupees. That's the entire yearly allowance for roads, schools, and public works in the district, a modest sum by national standards. Now compare that to what investigators say actually moved through one account tied to this district, over 37 billion rupees, according to NAB's own findings. That is not a budget overrun. That is a number that should have triggered alarms the very first year it appeared. The account at the center of it all was called Security and Deposit Works, KP 10113, a fund meant to hold contractors' security deposits until public projects were verified as complete. In theory, it is one of the most boring accounts in government finance. Money sits there, untouched, until a road or a building is finished and inspected. In practice, prosecutors allege it became a printing press for fake wealth. Between 2018 and 2024, NAB investigators say withdrawals from this account became unusually, almost absurdly, large. According to NAB's findings, more than 1,000 treasury checks were issued from this single account, tied to development projects that, investigators allege, simply did not exist. Roads that were never built, culverts that were never poured, water schemes that never reached a single village. Each fake check needed a paper trail, a bill, a work order, a completion certificate, and all of it, according to investigators, was fabricated. The Accountant General's office in Khyber Pakhtunkhwa later identified more than 1,293 forged checks and over 50 suspicious bank accounts tied to the district. Someone, somewhere, had to sign off on every one of those checks. And that's where the story stops being about paperwork and starts being about people. Because behind every forged signature was a real official in a real government office, choosing to look the other way, or worse, orchestrating it. The man investigators would later call the central figure in this scheme wasn't a senior bureaucrat with decades of clout. He was, by NAB's own description, a former clerk. Someone who had spent years processing routine paperwork in the Communication and Works Department. His name, according to NAB's public statements in multiple Pakistani news outlets, was Kaiser Iqbal. And the way he allegedly built his fortune is the part of this story that should worry every legitimate business owner watching this video. According to NAB, Kaiser Iqbal worked his way up from clerk to head clerk inside the Communication and Works Department in Upper Kohistan. It is, on paper, a modest government post, not the kind of job that generates palaces, gold, or fleets of luxury vehicles. Yet when NAB investigators searched his properties, they say they recovered gold, foreign currency, luxury vehicles, and original treasury check records, the paper evidence of the scheme itself. Investigators allege the scheme ran for years, Some reports say the fraudulent withdrawals date back as far as 2013 and accelerated sharply after 2018. The method, according to NAB, was almost mechanical in its simplicity. Create a fake development project, generate the paperwork for it, and route the payment through accounts NAB later described as fronts. But here's the detail that should make every business owner in this audience pay close attention. Kohistan Scandal did not put the biggest sums directly in his own name. According to NAB, he allegedly used what Pakistani law calls a benami, a proxy, a frontman, someone else's identity used to disguise the real owner of an asset. And the frontman he is alleged to have chosen was about as unlikely as it gets, a dumper truck driver named Mumtaz Khan. According to NAB's own account, Mumtaz Khan was, before this scandal, an ordinary driver, the kind of worker who moves gravel and construction material for a living. Investigators allege that Kohistan Scandal helped set him up as the owner and director of a construction firm that existed mostly on paper. MS Mumtaz Khan Construction Company. Through that single company's bank accounts, NAB says it traced a total turnover exceeding 16 billion rupees. Later reporting around the case put transactions tied to Mumtaz Khan's account at approximately 17 billion rupees, moving through the district accounts office in a matter of months. Read that again. A company fronted by a truck driver moved more money in months than most mid-sized listed companies move in years. Investigators say more than 3 billion rupees of that total was allegedly withdrawn directly from the government treasury into accounts linked to this front company. When NAB finally arrested Mumtaz Khan in October 2025, officials publicly described him as someone who had gone from dumper driver to billionaire. He did not fight every charge in open court. Instead, in January 2026, he applied for what Pakistani law calls a plea bargain, surrendering assets in exchange for reduced legal consequences. The Peshawar Accountability Court approved a plea bargain requiring him to return 4 billion and 50 million rupees in cash, properties, and vehicles. It was at the time described by NAB as a historic recovery, and it became the first confirmed conviction in the entire scandal. Think about what that means for a moment. The frontman, not the alleged architect, was the first person legally held to account. This is exactly the benami risk every serious asset owner in Pakistan needs to understand. Proxies are not shields. They are liabilities with your name quietly written underneath. If regulators can trace a truck driver's bank account back to 17 billion rupees in irregular transactions, they can trace yours too, if the pattern looks the same. And Kohistan Scandal himself, the alleged architect, was arrested days after Mumtaz Khan, taken into custody with his wife following discharge from a hospital in Abbottabad in October 2025. No embezzlement scheme this size can survive on government paperwork alone. At some point, the money has to move through a real bank. And according to NAB, that bank was a branch of the National Bank of Pakistan in Dessau, the administrative center of Upper Kohistan. This is the detail that should concern anyone in banking, compliance, or anti-money laundering roles, because a single branch became the pressure valve for billions in suspicious transfers. NAB investigators allege a bank manager at that branch, Tahir Tanvir, used his position to help move public funds through accounts that should never have qualified for such activity. According to reporting on the case, Tanvir allegedly opened a fake account in his own brother's name, routing more than 500 million rupees for a firm that NAB says performed no actual work. When investigators first approached him, reports say he initially attempted to mislead them before ultimately being arrested. Alongside him, NAB also arrested a bank cashier, Mohammed Riaz, who investigators allege worked directly with the fake firms to process the fraudulent transfers. Some reporting describes Riaz as a former cashier turned contractor, someone who allegedly understood exactly how to make suspicious transactions look routine on paper. This is the uncomfortable truth for every compliance officer watching this video. The fraud wasn't hidden behind sophisticated offshore structures or complex derivatives. It was hidden behind ordinary account opening forms at a real, licensed, regulated branch, the kind that exists in almost every district of the country. State Bank of Pakistan regulations require banks to flag unusual transaction patterns, verify the source of large deposits, and monitor accounts tied to public sector fund flows. According to the allegations in this case, those controls were either bypassed, ignored, or deliberately circumvented at the branch level for years. If a single branch manager can allegedly route ₹500 million rupees through a relative's account without triggering a system-wide alert, the question every bank should be asking is simple. What else hasn't been caught yet? For the compliance professionals in this audience, this case is a textbook example of layering, moving money through a chain of accounts specifically to obscure its original, illicit source. Investigators say the money moved from treasury accounts into contractor-linked security deposit claims, into shell company accounts, and finally into personal wealth, cash, gold, vehicles, and property. Each layer added distance between the original government account and the final beneficiary. Each layer also made the money trail exponentially harder for auditors to reconstruct, until forensic investigators started working backward from suspicious asset purchases instead of forward from the Treasury. NAB's combined investigation team ultimately scrutinized more than 1,500 individual bank accounts, trying to map the full extent of this network. That number alone tells you something important. This was never a 2- or 3-person scheme. It was, according to investigators, a network. Officials, bankers, and contractors, each playing a defined role, each protected by the layer above and below them. And once you understand the network, the next question becomes obvious. Who were the contractors receiving all these fraudulent payments? And where did the money ultimately land? That's where this story gets even more uncomfortable for the province's business and political establishment. Beyond Kaiser Iqbal and Mumtaz Khan, NAB's July 2025 arrests named several contractors it says played central roles in the scheme. Among them was Mohammed Ayub, described by investigators as operating multiple bank accounts tied to fake construction firms. NAB alleges Ayub's firm received over 3 billion rupees through bogus treasury checks, later used to purchase luxury vehicles and properties, some registered through additional benamidars. In April 2026, reporting indicated Ayub had also negotiated a plea bargain worth roughly 4 billion rupees, agreeing to surrender assets to the state pending court approval. Another contractor named in NAB's arrests, Amir Saeed, allegedly received more than 1 billion rupees through his firm, which investigators say participated in laundering the proceeds. A third contractor, Daraj Khan, allegedly received over 1.1 billion rupees, which NAB says he funneled into both personal accounts and property purchases, some held through proxies. A fourth name, Subadar, owner of a firm called MS Subadar and Sons, allegedly received 376 million rupees in payments NAB describes as fake. Notice the pattern across every single one of these cases. A small, previously unremarkable construction firm suddenly receiving payments worth hundreds of millions or billions of rupees. If you are a legitimate contractor or developer working anywhere near government infrastructure spending, this pattern should sound familiar. And that's exactly the danger. Because when regulators go looking for shell company red flags after a scandal like this, they build a profile. Small firm, sudden windfall, minimal physical operations, family or proxy ownership. And that profile can just as easily flag an honest, fast-growing small contractor that happens to fit the same statistical shape. This is precisely the unspoken fear for legitimate business owners in this space. Not that you did anything wrong, but that your growth curve looks, on paper, uncomfortably similar to a fraud pattern. Regulators are now actively hunting. NAB's total accounting, as of its most recent public statements, put more than 27 billion rupees in frozen assets tied to this case. That includes dozens of properties, luxury vehicles, cash holdings, and gold, seized not necessarily because every owner was guilty, but because their assets were linked, directly or indirectly, to the suspect money trail. Early in the investigation, raids on just 12 residences of key suspects reportedly yielded over 1.5 billion rupees in cash, foreign currency, and roughly 3 kilograms of gold. Later reporting described the seizure of 30 houses, 25 apartments, 12 commercial plazas, 12 shops, 4 farmhouses, and 175 canals of agricultural land. 77 luxury vehicles worth an estimated 940 million rupees were also recovered. Mercedes, BMWs, and Audis among them, according to reporting from the news. This is the physical, tangible scale of what allegedly happened in one of Pakistan's poorest districts by official development budget. And it raises the exact question the concerned professional segment of this audience is asking. How does a district with a budget of barely 1.5 billion rupees a year generate assets like these? The honest answer is that it didn't. The district's real economy generated almost none of it. What generated it, according to every document NAB has released, was a paper economy. Fake projects, fake bills, fake checks, layered on top of a real, functioning banking system that failed to catch it. And that failure eventually reached far beyond contractors and clerks into the political layer of Khyber Pakhtunkhwa itself. By May 2025, this was no longer just a NAB case. It had become a live political controversy inside the Khyber Pakhtunkhwa Assembly. On May 14, 2025, Provincial Assembly member Ahmad Karim Kundi stood up in a session of the Public Accounts Committee and directly accused the province's finance advisor, along with the Accountant General's office, of misappropriating funds tied to this case. The Accountant General's office pushed back, telling the committee it bore no responsibility for the forged checks and pointing instead toward the National Bank of Pakistan and the Communication and Works Department. In other words, every institution involved immediately started pointing fingers at every other institution. That is itself one of the biggest lessons of this entire scandal. When oversight bodies are more focused on assigning blame than closing the gap that let the fraud happen, the fraud keeps happening. On May 15, 2025, the Accountant General of KP recommended disciplinary action against 10 separate finance department officials. The Provincial Public Accounts Committee, chaired by the Assembly Speaker, opened formal hearings and ordered the suspension of officials across the Finance Department, the Communication and Works Department, and the Accountant General's office. Then on May 21, 2025, the News International reported, citing an anonymous source, that 2 multi-million rupee transactions had allegedly moved from KP's treasury accounts to 2 senior leaders of the then ruling party, Pakistan Tehreek-e-Insaf. According to that same reporting, both individuals were said to be under NAB investigation in connection with the case. This is where the story shifts from financial crime to governance crisis, and it's exactly why journalists and policy analysts have followed it so closely. In June 2025, NAB formally summoned Pakistan Tehreek-e-Insaf leader and former federal minister Azam Swati to appear before its investigation team. According to NAB's allegations at the time, roughly 300 million rupees had been transferred into a personal account connected to him. Reports from the Express Tribune indicate Swati did not appear at the first scheduled hearing and was instead represented by legal counsel. He later did appear before a NAB investigation committee in late June 2025, where he was formally questioned. On July 14, 2025, NAB again summoned him, stating that documentation he had previously submitted was, in the Bureau's assessment, insufficient. It's important to be precise here. Being summoned and questioned by NAB is not the same as being convicted of a crime, and no verdict on his individual case has been reported at the time of this video. But the fact that a sitting former federal minister could be pulled into a district-level embezzlement investigation tells you how far this scandal's money trail is alleged to extend. Opposition politicians used the scandal to accuse the then-ruling party in Khyber Pakhtunkhwa of what they called systemic corruption. Punjab's Information Minister, Asma Bukhari, publicly called the scandal a disgrace, framing it as a decade-long governance failure in the province. Federal officials, meanwhile, publicly commended NAB's investigative work while also acknowledging the scale of the oversight failures that allowed it to happen in the first place. Then, in May 2026, an entirely new political threat emerged. A company linked to a sitting member of the National Assembly was reported to have received roughly 1 billion rupees through fake bills tied to this same scandal. According to Profit by Pakistan Today, that company's assets and properties were frozen pending investigation, with authorities examining whether the lawmaker himself might eventually face arrest. As of this video's publication, that particular thread remains an open, active investigation, not a concluded case. What all of this tells the concerned professional audience watching this video is simple. In Pakistan, a single provincial treasury account can become a live wire connecting a district clerk, a national bank branch, a provincial assembly, and a sitting national lawmaker, all traceable through the same forensic audit trail. So how did NAB actually crack a scheme this layered, this old, and this well-disguised? The formal inquiry was authorized by the NAB chairman in April 2025, following mounting pressure from the Provincial Public Accounts Committee. Under NAB Khyber Pakhtunkhwa's Director General, Farmanullah, a combined investigation team was assembled, pulling forensic accountants, financial analysts, and field investigators into one coordinated unit. Their first job wasn't chasing suspects, it was chasing paper, reconstructing which checks were real, which were forged, and which projects behind them simply never existed. That reconstruction alone identified over 1,000 suspicious treasury checks tied to non-existent development schemes. From there, investigators moved to the second phase, following the money once it left the treasury. This is where the 1,500 account forensic sweep came in. Treasury officials' accounts, contractors' accounts, bank employees' accounts, and every account connected to them by transaction history. According to NAB's own account of the investigation, one of the biggest breakthroughs came when investigators isolated the account tied to Mumtaz Khan's front company, the one that had processed roughly 17 billion rupees in a matter of months. Freezing that single account, officials say, stopped further losses in real time and gave investigators a template for finding similar accounts elsewhere in the network. From there, the investigation expanded outward. Asset tracing, property registry searches, vehicle ownership checks, and cross-referencing benami ownership claims against real beneficiaries. This is precisely the forensic methodology that compliance professionals and forensic accountants in this audience should be studying closely. It wasn't one silver bullet piece of evidence. It was the patient layering of transaction data, asset records, and testimony until the false fronts collapsed under their own inconsistencies. By July 2025, NAB felt confident enough in its evidence to move to arrests. 8 suspects taken into custody in a single coordinated operation. 2 government officials, 2 bankers, and 4 contractors. That first wave of arrests sent a visible signal through the province's contracting and banking community that the era of assuming a district-level scheme was too small to attract national attention was over. More arrests followed through late 2025 and into 2026, as investigators worked outward from the initial network toward its financial and political edges. By the time NAB made its most recent public statement in June 2026, the Bureau reported 41 total suspects arrested in connection with the case. Investigators say the total amount traced through the investigation now exceeds 37 billion rupees. More than 27 billion rupees in assets has been frozen under NAB's authority. More than 10 billion rupees has been recovered through plea bargains. Suspects voluntarily surrendering assets in exchange for reduced legal consequences. And in June 2026, NAB completed the first formal phase of returning that recovered money to the Khyber Pakhtunkhwa government. At a ceremony in Peshawar on June 2, 2026, NAB Chairman Lieutenant General, retired, Nazir Ahmad personally handed over assets worth more than 6 billion rupees to KP Chief Secretary Shahab Ali Shah. According to NAB's statement, that first tranche included more than 5 billion rupees in cash, roughly 1 kilogram of gold, 12 luxury vehicles, and 18 separate properties. NAB officials described this handover as only the first phase, with additional recovered assets expected to be transferred to the provincial government as remaining legal procedures are completed. For an investigation that began by chasing a single unusual line item in a treasury ledger, that ceremony marked the first time the province actually got real money back. Now let's talk about why this case should matter to you personally, even if you have never set foot in Upper Kohistan. If you are a business owner, developer, or contractor who works with government contracts anywhere in Pakistan, this case is a live case study in exactly what regulators will now be looking for. The first lesson: Sudden, disproportionate revenue growth relative to your firm's real operating capacity is the single biggest red flag investigators use to open an inquiry. If a construction firm with minimal equipment and a handful of employees suddenly shows billions of rupees in turnover, that mismatch is precisely what triggered scrutiny in this case. If your legitimate business is genuinely scaling fast, document it. Contracts, site records, employee payrolls, equipment purchases. So your growth has a verifiable paper trail that doesn't resemble a shell operation. The second lesson, benami ownership. Putting assets in someone else's name is not a legal shield. It is a liability that puts someone else's freedom on the line alongside yours. In this case, the person NNAB pursued first, arrested first, and secured the first plea bargain from was not the alleged architect of the scheme. It was his frontman. If you use a relative, employee, or associate's name on property, shares, or accounts for legitimate tax or estate planning reasons, make sure that structure is transparent, documented, and defensible under Pakistan's benami transaction laws, not a pattern that mirrors this case. The third lesson, your banking relationships carry risk you don't control. Investigators allege this scheme moved through a single national bank branch, meaning every legitimate account holder at that branch was, at minimum, operating inside an institution under active investigation. If your bank branch, your relationship manager, or your account structure gets swept into an unrelated investigation, your legitimate transactions can be frozen or delayed simply by association while investigators sort out who is actually involved. The practical defense here is boring but essential. Keep clean, well-documented banking relationships, avoid unnecessary complexity in your account structures, and maintain your own independent records of every significant transaction. The fourth lesson, and perhaps the most important one for this audience, understand exactly what triggers a NAB inquiry versus what doesn't. NAB inquiries typically escalate when there is a mismatch between declared income, visible asset accumulation, and the underlying business activity that supposedly generated it. This case escalated because a truck driver's declared profession could not plausibly explain 17 billion rupees moving through his company's accounts. If your own wealth accumulation has a clear, documented, legitimate source, inheritance, verified business revenue, disclosed investment returns, you are in a fundamentally different position than the frontmen in this case. The fifth lesson, plea bargains move fast once evidence is solid, and they favor those who cooperate early. Mumtaz Khan's plea bargain, 4,050 million rupees, was approved within roughly 3 months of his arrest, once NAB's evidence was deemed conclusive. Muhammad Ayub's plea bargain of roughly 4 billion rupees followed a similar pattern months later. For any business owner who ever finds themselves facing a legitimate inquiry into a genuine misunderstanding or paperwork error, as opposed to actual wrongdoing, understanding how quickly these processes can move matters. The sixth lesson, forensic account sweeps in Pakistan are no longer symbolic. NAB scrutinized over 1,500 bank accounts in this single case alone. That scale of forensic capability did not exist, at least not at this operational tempo, a decade ago. If your assumption has been that regulatory oversight in Pakistan moves too slowly or too narrowly to reach ordinary business accounts, this case should update that assumption. The seventh and final lesson for this audience, geography does not provide the insulation it once did. NAB's investigation reached from a remote mountain district all the way to a national bank branch, a provincial assembly, and, according to the most recent reporting, a sitting member of the National Assembly. If public money touched a transaction anywhere in that chain, the forensic trail can, in principle, reach it. None of this means legitimate business is under siege. It means the era of assuming complexity equals invisibility is ending. The businesses that will thrive in this new environment are the ones that can prove cleanly and quickly exactly where their money came from. If you work in banking compliance, anti-money laundering, or forensic accounting, this case deserves a place in your internal training materials. The core institutional failure here wasn't a lack of regulation. State Bank of Pakistan rules on large transactions, source of funds verification, and public sector account monitoring already existed. The failure, according to the allegations in this case, was enforcement at the branch level, where a single manager and cashier allegedly had enough discretion to bypass those controls for years. This points to a structural compliance question every bank should be asking right now. How much unsupervised discretion does a single branch employee actually have over account opening and large transaction approval? The second institutional lesson is about layering detection. Money in this scheme moved through treasury disbursement into contractor accounts, into shell company accounts, and finally into personal asset purchases. Each individual transfer, viewed in isolation, might have looked unremarkable. It was the pattern across dozens of transfers that revealed the fraud. This is exactly why modern AML systems increasingly rely on network analysis and pattern detection rather than single transaction thresholds alone. The third lesson concerns benami accounts specifically. A frontman with no plausible income source controlling an account with billions in turnover should be one of the most detectable red flags in any compliance system. That it took years to surface here suggests either a gap in automated monitoring, a failure in manual review, or both. The fourth lesson is about public sector account monitoring specifically. Government treasury accounts, by their nature, should carry heightened scrutiny, not less. Yet this account processed unusually large withdrawals against non-existent projects for years without triggering an escalation to the Accountant General's office or the state bank. For compliance teams, the practical takeaway is to treat any account tied to government development or security deposit funds as inherently higher risk, regardless of its historical transaction pattern. The fifth institutional lesson involves cross-agency coordination. Part of what allowed this scheme to run so long was the diffusion of responsibility across the Communication and Works Department, the District Accounts Office, the Accountant General's Office, and the bank itself. When the scandal broke, as we covered earlier, these institutions spent real time publicly blaming each other rather than immediately reconciling their records. Effective compliance structures need clear, singular accountability for reconciling public sector accounts, not a diffusion of responsibility that lets every institution claim it wasn't their job. The sixth lesson is about forensic readiness. NAB's combined investigation team ultimately reviewed more than 1,500 bank accounts to fully map this network. Financial institutions that can proactively run similar network analysis internally, before a regulator forces them to, are far better positioned to catch the next Kohistan before it reaches this scale. For the compliance professionals in this audience, the strategic opportunity here is clear. This case is now a public, documented reference point you can use to justify stronger internal controls to your own leadership. When someone asks why your institution needs better source of funds verification or stronger benami detection protocols, you now have a fully sourced 40 billion rupee case study to point to. Share this video with your compliance team. It will save you the time of summarizing months of scattered news coverage into one coherent timeline. Step back from the individual names and numbers for a moment, and this case becomes a story about institutional design. A district with a legally mandated annual development budget under 1.5 billion rupees somehow had a single account processing tens of billions in unauthorized withdrawals. That gap between the legal budget and the actual money flow is itself the clearest evidence that oversight mechanisms failed at a structural level, not just at the level of individual bad actors. According to Geo News reporting from the earliest days of the scandal, evidence pointed to the involvement of what it called rogue officers and elements at the highest levels of the provincial leadership, who allegedly allowed financial regulations to be bypassed. That is a serious allegation, and one that has driven much of the political controversy this case has generated since April 2025. It's also why this case has stayed relevant for over a year now, and why it is likely to remain a reference point in Pakistani governance debates for years to come. The Provincial Public Accounts Committee's early hearings forced public acknowledgement of the failure, even before NAB's investigation reached its most serious findings. 10 Finance Department officials faced recommended disciplinary action, multiple departments faced suspensions, and still, the political and financial trail kept expanding. For journalists, policy analysts, and researchers, the most important structural question this case raises is not who stole the money? That answer is well underway. It's what specific control, if implemented, would have caught this in year 1 instead of year 6. Some of the emerging answers are already visible in how NAB itself investigated. Automated cross-referencing of Treasury disbursements against verified project completion records, mandatory source of funds checks on any account showing turnover disproportionate to its owner's declared occupation, and genuinely independent audit authority that isn't dependent on the same departments it is meant to oversee. Whether Khyber Pakhtunkhwa or any Pakistani province implements those reforms in a durable way is the real test of whether this case becomes a turning point or simply the biggest entry in a long list. Because Pakistan has had large public sector corruption cases before this one, and it will almost certainly have others after it. What makes the Kohistan case distinctive is the sheer clarity of the paper trail NAB has been willing to make public: check numbers, account names, specific rupee figures, named individuals, and a documented recovery process. That level of transparency, whatever its limitations, gives researchers and journalists an unusually detailed case study to work from, which is exactly why this video exists. If you're using this as source material for your own reporting or analysis, every figure in this video is drawn from NAB statements in Pakistani outlets including Dawn, Geo News, The News International, Business Recorder, Pro-Pakistani, and Pakistan Today, all linked in the description. It's worth asking the practical question that every audience segment watching this video wants answered. Where physically did all this recovered wealth actually go? Properties seized under this investigation span Islamabad, Rawalpindi, Peshawar, Abbottabad, and Mansehra, a geographic spread far beyond Upper Kohistan itself. That spread tells you something important. The wealth generated by this scheme wasn't hidden locally. It was moved into major urban real estate markets where it could blend into legitimate property transactions. If you operate in real estate in any of these cities, understand that provincial and federal authorities are now actively cross-referencing property registries against NAB's benami investigation data. Luxury vehicles recovered under this case, Mercedes, BMW, and Audi models among them, were reportedly purchased and registered in ways designed to obscure their true beneficial owner. Gold and foreign currency holdings recovered during residential raids represent the most liquid, least traceable portion of the alleged proceeds, which is precisely why they were a preferred store of value for those involved. As of June 2026, NAB describes the recovery process as ongoing, with additional asset transfers to the KP government expected once further legal procedures are finalized. That means the final total recovered and the final list of individuals held accountable is very likely to grow beyond what's documented in this video. Given how this case has evolved over roughly 14 months, from a single suspicious ledger entry to 41 arrests in a sitting member of the National Assembly's company under investigation, it's reasonable to expect this story to keep developing for years. That is exactly why I'm asking you to subscribe and follow this channel. Because when the next phase of this case breaks, whether it's a major court verdict or a new name pulled into the investigation, we will cover it here. If everything in this video has made you a little uneasy about your own exposure to public sector adjacent business, banking relationships, or asset structures, that unease is worth acting on, not ignoring. Start with a basic internal review. Can you clearly document the source of every major asset you hold in a way that would satisfy a forensic auditor who has never met you? If any part of your ownership structure relies on a proxy, relative, or associate holding assets on your behalf, get that arrangement reviewed by a qualified legal professional familiar with Pakistan's benami transaction laws. If you sit on the board of, advise, or personally bank with an institution that handles public sector fund flows, ask directly what source of funds and large transaction monitoring controls are actually in place, not just on paper. I go deeper on these exact protective strategies, how to structure ownership defensibly, how to read the early warning signs of an institution under investigation, and how to think about risk in Pakistan's current accountability environment with people who reach out to me directly. If you want to discuss this case, your own risk exposure, or anything else related to hidden money and power in Pakistan, message me directly on Signal at thebusinessarchitect123.43. I read and respond to those messages personally. 6 years ago, this started as one unusually large withdrawal from one unremarkable government account that nobody thought to question. Today, it stands as one of the largest financial scandals in Pakistan's history. 41 people arrested, over 37 billion rupees traced, and a recovery process that is still unfolding as you watch this. The lesson isn't just about Kohistan, it's about how quickly an ordinary account, an ordinary bank branch, and an ordinary contractor can become extraordinary, for all the wrong reasons, when nobody is watching closely enough. If this video gave you a clearer picture of how hidden money actually moves through power in Pakistan, subscribe to The Business Architect, and I'll see you in the next one.